All right, starting with the first topic today, which is the introduction and explanation of terms. I'll spend some time to explain what we have on the documents which I shared to you guys. There was a document I shared initially, and that document is about the ChainDustry investment department at ChainDustry Limited. So I'm going to go through it once again so that some of the things you did not understand on on that document, you'll be able to ask me some questions today, and I'll be able to answer them to you. And then I'll discuss some. I'll teach you guys some things that you need to know as an investor, or particularly Web3 investor, because investment is all about risks. It's not very safe, but then you take the risks because good risks comes with returns too. So I'm looking for the document now. All right, so uh, the ways I will start with the reason why we are doing this. What inspires us to do this? For a while, I've been investing in cryptocurrency. I've worked with some venture capitalist companies in Web3, like LD Capital, Chainfair Capital, and so many companies in the ecosystem. I've worked with them. So these companies, I do due diligence with them. I work more like an investment analyst. And I understand that these guys have the opportunity to invest in cryptocurrencies at early stage. Most times the people that see the profit the most are the ones that come in early. So you need to come in very early into anything to be able to see great profit. People that adopt something early, something good early, not something bad, because something bad is the one that doesn't come up with great returns. And I also want you to understand that there's a difference between trading and investment. Based on analysis and data, we have it that 70% of investors are always successful, and 2% of traders are successful, and that is not a good statistics. But then uh, we are going to be working together as a team to make it a success for all of us, understanding the risks. uh, we have a minimum investment of $10 at industry and a maximum investment of $10 million for each individual or group, because you can come in as a group, but one person is going to represent the group. And it's advisable you come in individually because $10 is affordable for everyone. And we have a 5% management fee. This 5% management fee is charged at the point that you invest. So if you are investing a $10, if you are investing $10, $20, you'll be charged 5%. So $10 will mean automatically from the date you are investing $9.5. And we are not charging you this money for fun. We are charging you this money to invest with you. There will be investment spreadsheet that will be shared out to all investors. Currently, our developers are still building the dashboard that can help investors see and manage their investment. So that is still coming up, and by next year it should be released in the first or second quarter of next year, so that we can have a way to manage and see our investment clearly. The reason why we are doing this is during early stage investment, there is a minimum amount that one can invest into a Web3 project, and that minimum amount is not $10. Now, I see projects like this. Let me take, for example, projects like Polygon, because there is a place that you can see how investments are going through. Let me use Polygon. We are going to use Polygon as an example to understand why we are doing this. Now, this is Polygon. Polygon had a pre-sale or a private sale in 2018, pre-seed. There is seed stage, there is pre-seed stage, there is a public stage, and all that stuff. There is A, B, and C for investment. So during the pre-seed for this Web3 investment at Polygon, which happened 30th of April, um, 30th of April 2019. Let me check when the first investment happened. 30th of April 2019. Okay, I think you should look at this. So this happened, and then the one that happened 1st of January 2018, 1st of January to 30th of January 2018, people that invested at the price of 0.0026 have had over 400x of their investment. So if you have your calculator with you and you calculate your $10, assuming you have the patience to stay for 5 years, times 400x, assuming you enter at that point, it is worth $4,000. And for the Nigerians, 5 years ago, $10 was worth 35 naira, and the return on investment currently would mean you have over 4 million in 5 years investing 3.5. And then look at this pre-seed round. The people that were lucky to invest at this point of 0.0000079 have done 1,342x. So even if you put a $10 into this, you're looking at 130 something thousand dollars return on investment. And I think it has done an all-time high of 3,600 and something investment during the bull market of 2021, when Polygon hits 3 point something dollars, 3.6 or $3.7. So that was when they had this kind of massive return on investment. So the target was to raise $165,000. Polygon raised this amount, and this kind of pre-seed investment used to have a minimum amount you can enter. Let's say $5,000, $6,000, $10,000. Some of us individually might not be able to afford that amount to enter, so we do not have the opportunity to enter at this point. So because our funds are low, and that is why I decided to democratize it. We can now fund ChainDustry investments together as a team. $10 collected from over thousands of people can raise a lot of money that we can have the opportunity to come in here, because you have seen what your $10 can be if at all you entered here. And even if you entered here, and there are people that also entered here April of 2019, so see the return on investment that they had. And based on due diligence, the launchpad platform that Polygon Matic launch is a very good one, which is Binance, and they can make very great returns on investment. So if I was doing due diligence at this point, I would have qualified Polygon Matic to be a very good investment for us to enter. Even if they launch in a bear market, they have done very good X, because they have had industry investors come in. You can see people like Alan Howard, Mark Cuban, John Lilly. This guy have also invested in Telos, which is a potential coin for people to buy. And we have a Monica brand, Union Galaxy, Coinbase Ventures also invested, this new accelerator, and so on. There are so many strong investors into this, and these strong investors do high level of due diligence. So if you are following up their footsteps, money makes money. So if you are following up their footsteps, you have a chance to make the money that they make. These guys are billionaires. So follow up. I'm not talking about Naira billionaires, talking about dollar billionaires. Follow up their investments, and it could turn out to be great for you. Now, this is one in many. How about the new ones that are coming up? In crypto, for the new investors that are not exposed to this at all, in crypto we have the bull market and the bear market. The bull market is when crypto prices are always going up. Greed in the market is high. The bear market is when fear is high in the market. People are selling. Pressure is coming up on people. A lot of people are dumping their cryptocurrency, and price is continually going down or tanking down badly. So during the bear market, it's not always a very good time to invest in crypto. The bull market is a good time. And when is the bull market? The bull market happens once every 4 years, following up BTC halving, which is something you can learn much later at ChainDustry Academy. So 1 in every 4 years, and the next BTC halving is going to happen in April of 2024, which is going to release the bull force into the market. And currently we are already having a pre-bull season. The pre-bull season is triggered by ETF fund, which is going to be launched early first week of January. I think first or second week of January, around 6 to 8 of January. And this is a great positive fundamental news that can push the market upwards. We have seen some cryptocurrencies, for some people that are active in the ecosystem, cryptocurrencies like Solana moving all the way from 12 or $10 to around $100. So that's a lot of X on it. So I'm not here to give you all that detail, especially for the investors that are very new to this, so that I don't bore you with things that you are not good with. So then you now see why we have to collect small pieces of money from you guys to see how we can enter into this point and make return on investment for you. One thing I have to assure you is that your funds are safe, because we are going to do due diligence. Even if you we have to sign the investment agreement. Your funds are going to be safe. Your principal funds are going to be safe. You can get your principal funds returned to you in 3 months, 4 months, 5 months. Like the amounts you used to invest can be returned at that point. But then your profit can come in later. There's a dashboard which I am going to show you guys here, one of the investment I did, so that you guys can see how ROI is going through. And I'll also explain some things to you like cliff and also vesting period, which is very important because for each project there are different types of cliffs and there are different types of vesting period that you should follow. So okay, not saying so much, I'll move back to this. Now that you understand why we have to invest as a team to be able to assess good pre-sales, I want to show you guys this project, which is the project I invested in. I think the project has done 5x. It did up to 10x. All-time high x was 11x. But I think I was able to recover. I invested $500 into this project at seed sale. Seed sale was 0.004. That's because I had a relationship with the team. I think my investment has done 7.5x. Now, if your investment does 7.5x, 10x, 20x, and this project release everything to you, there's a potential risk that I can sell everything off. So there is something called vesting period. There's something called cliff period. So now I'm going to explain some things. But before we get to that, let me check what the next topic is. Sorry. So we have the next topic, types of pre-sales. What are types of pre-sales? What are pre-sales and types of pre-sales? Private sales and public sales. So I'm going to do number 2, 3, 4 together. Then before we move into 2, 3, 4 together, there is we have to look at the document. You have to look at the document. Now, one of the most important thing that people need to understand about this document is the phases, investment phases. Before I go on to explain item number 2, 3, 4, we have 7 investment phases because we are very transparent with what we are doing and we want everybody to participate and see what is happening. Some investors have money, they don't have time to follow up all these things that we are doing, but it is very important. If you are that kind of investor, it is very important for you to understand there is a consent agreement that you sign that even if it goes bad, you are not going to hold ChainDustry investments responsible for this because you understand the risks of investment. So ChainDustry investments is going to take the risks. We are going to do our best and make everything open source for investors to see what is going to happen. But you are not going to hold us responsible if it happens. Why is it like that? It's not like we are planning to fail. No. As long as I'm involved, I'm not planning to fail. Okay? So, but the truth is, even the best pilots do crash. Even the best captains do crash. So we shouldn't be overconfident on our expert level. So, I've seen a pilot who has 40 years of experience and still crashed a plane with 300 passengers in it. So it's possible that these certainties in life can happen, and if it happens, we have to protect the interest of the company, which is where you sign your consent agreement. But for one thing is for sure, your principal funds are always safe. The chances of principal funds getting lost is very low. I would say 2%, but to give it leverage, I would say 10% over 100%. And those chances comes even if after we have done due diligence and there is a big crash. Like FTX was a very good project to invest in at pre-seed, but you know what has happened to FTX already? It's down. Luna was a very good project for investment, but for those people that are in the ecosystem, you know what has happened to Luna already. So those kind of things can set in. Some uncertainties can set in that is not in our power to manage. And before those uncertainties happen, at least it doesn't happen immediately. It happens after a while. You must have recovered most of your investment, and maybe some will still be locked up, but at least you'll not be on the loss. The only time you'll be on the loss is if you invest in a project that is a scam. But with due diligence, we are not going for scam projects. Or if we invest in a project that had security issues, they got hacked, and then we are not even able to recover our principal funds. One of the companies I worked with, ChainDustry Capital, a Chinese or Asian investment company, because they don't base in only one country. I think they lost over 500k of principal funds in 2021. Yeah, not like they totally lost, they couldn't recover full principal funds due to some uncertainties that happened at the project. But I don't know, I didn't follow up later. I don't know if they are fully recovered that. And that is one out of 30 something investments that they have made. So it's not something that happens all the time. Sometimes it could go wrong. Even flight companies, they'll fly 200 planes and maybe 2 crashes out of 200, or 500 planes and then 3 crashes out of 500. So that's what I'm trying to let you guys know. So we have investment round 1, 2, 3, 4, 5. We'll do our best to make sure we don't crash at round 1, because that will really discourage you to join round 2. So round. We'll have series of round in a year. We can have up to 10 rounds. So when your principal funds is in return to you, you have a chance to enter round two, round three, round four, and so on. So that's 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 the mindset. So please don't panic. Now, investment phase, project hunts and selection phase is going to happen with our team of experts at ChainDustry. We select projects. One of my favorite projects is aesthetics. I don't know why I so much believe in this project, but I don't want to be clouded by sentiment. So I'm going to put it out for the whole community to see why I like the project. So uh, we will have project hunts. I also have Unigrid on my radar. I have some nice project that I haven't launched yet on my radar that I'm still looking into. So when we on this project, we present a list of projects to the community that we want to do diligence on, and we sit down to do due diligence. Due diligence is the hardest part of this, and this is where expertise is needed. We are going to calculate the FDV, do a lot of maths. It involves a whole lot of maths. It involves a whole lot of investigation. You have to be very good. You have to be like somebody who is working in the API to find out things for yourself. And there are also tools that can help us, like on-chain analysis tools that can help us, that we can use to find some very, very good things. And then we can also check out the team profile using honeypots. Some of the experts at ChainDustry are very good at this, and we are going to do it very well. After our due diligence, we have a team of people that will do some videos, including myself. I will come out and, because we select 5 projects at phase 1 and phase 2, during the due diligence, after I've done my research on these 5 projects, I will now state the pros and cons. At stage 1, they have criteria that this project needs to meet. If you don't meet up to 80% of our criteria, I will just do a video on 5 of those projects. So it's going to be like a 5 minute video so that I don't bore you, and compare if these guys have met these criteria. Our designers at ChainDustry are going to do some kind of infographic to compare these projects, and we see which one is best. 1 out of 5 is going to be the one that we want investment for us to invest. I think so far so good. One of the projects that I've done due diligence, I've qualified 90% on this, which is aesthetics. Yeah, aesthetics. My company has a contract with aesthetics, so I think it's after the safe investment, but nothing is completely safe, so you don't bank on that. So um, then the next phase is the voting phase. Now, after due diligence, I think at due diligence phase, 3 projects will qualify. 3 projects will qualify for voting. Or is it 5 projects that will qualify for voting? I can't remember. I think I wrote everything down here. Yeah, 5 projects that will qualify for voting. So selection investment phase is where we can select as many as possible. The project hunt phase is when we can select as many as possible. The due diligence phase is where top 5 of this project that have made 80%, at least 80%, will be qualified for voting. And when they are qualified for voting, we vote for the best, the ones that people like the most. I don't know why I'm already fanning for aesthetics. Please don't change your mind. If there is a project we present to you during the due diligence phase and you like that one, please go for it. Vote for the one you like. So we are not going to tune our investors to go for what I like. Okay, I'm also an investor at this. I'm investor number 2. So I'm also going to be going into the investment personally, aside from what the company is going in. So investor number 2 likes a certain project doesn't mean you should follow and like this project. Vote for what you see during the due diligence video. So we vote, and then it's actually community opinion that we are going to use, investor community opinion that we are going to use to invest. And then the investment terms and conditions will be explained. We are going to have kind of an aim, something like this, to explain something to you. Now, this is what I mean by that. Now, let me open one of the projects that I was trying to invest in recently, so that I'll show you what I mean. Okay, yeah. So this is one of the projects, no? I think that's not the group we had that discussion. There was a group with Sia Labs. Let me find it. Okay, I've seen it. All right, so look at this statistics. How, while I was still negotiating with the founder of this project, you see stops like 15% TGE, 3%, 3 Cleave, and 10 Vest. As a novice investor, you might not even know what this is, and that could be confusing to you, but I understand what that means. And there's also linear vesting, there's also exponential vesting, there are different models. Like I said, it's mathematical, and I'm not going to be boring you guys with that. That's why we are charging you management fee to be able to do this on your behalf. But it's good you learn. It's good you learn because it's going to really take you to the ecosystem, and you enjoy it. When they say 15% TGE, now I'll do it with a mathematical example. Um, Chappies is a project that I invested at this price. Let me bring the page for Chappies. All right, let me bring it close to this. So Chappies is an investment I entered at 0.0004. Okay, I entered at 0.0004, which was a seed round, and I think they raised a total of $300,000 at this seed round. I was lucky to enter with $500. Not like my money was enough, because I think they had a minimum investment of $5,000 at seed round. But because I referred an investor to them, they gave me an opportunity to join at this point too. So when I joined here, I was qualified for 1.25 million of their token. If you calculate this, if you divide 500 by 1.25 million, let me do it here because you might not have. Sorry, $500 divided by 0.0004. You see that I was qualified to receive 125 million of that token. And on the investment spreadsheet, which will be shared to all of you, there's a spreadsheet that we are using to track our investors and what they have invested. So I use this Chappies as an example. This is the Chappies I invested in. See the price I used, 0.004, which is the investment price of Chappies. Assuming that investment I did at Chappies was what I did at round one for all of us, and this is what we'll possibly get from Chappies. Chain 001 is ChainDustry, Chain 002 is me. I think I invested $500 in this, so you see what is going to happen based on the investment amount I did. So holding shares, we are a community of people. Based on the amount you invest, you are going to have a holding share. Remember, ChainDustry investment holds 5% shares at every round that we enter, and you can see different investors. I use the commitment that people have made for this round one to do this example based on the previous investment I made, and see the possible ROI we would have had. This is a bit statistical. Please don't get twisted. For novice investors, please don't get twisted. So I'm just trying to give you some insight on how it works. So if you're working with ChainDustry investment, I think your principal investment will be $475. As putting myself as an example, and I will be holding 10% shares of the total investment. The total is this amount that we are using, $4,333. We have that as commitment already. So then I'll be holding that, and that qualifies me to receive one. Initially, if it was directly on this, it would be 1.25, but since the principal is now 475, it is 1185. Now 20% TGE, that terms that you saw here, 20% TGE, because this thing is going to vary. Why I'm doing this is that it's going to vary. It's going to vary per project. For Chappies, we have 24 vests, but for EC, we have 10 vests. So this is where I don't want investors to get confused. Okay, most projects always have 3 cliff, and now Chappies gave me 20% TGE. 20% TGE, 3 cliff, 10 vest. I'll explain what it means. Then EC is offering 15% TGE, 3 cliff, 10 vest. Okay, don't get confused. Now for Chappies that gave 20% TGE, they did 10%, 10% twice. What that simply means is the amount of token you are qualified to receive, you receive 20% of that at TGE. TGE means token generation event, the date their token launches. For Chappies, let me take this to this age. I have a lot of tabs. Let me take this to this age. Oh my god. I was doing a lot of research last night. For Chappies, okay, I was qualified to receive 237,000 of the token, and when they launch, there's something called fair launch price. If your investors are entering at this price, when you launch on exchange, what is your listing price? What's the price you are listing? Because there is private sale, there's public sales. Public sale is the one that is open to the public, where you see IDO, IEO. I'm going to explain all that stuff for you guys to understand at some point. So during the private sale, you see people that entered at 0.003. There was a price lower than the price I entered. You see, they have done 10x. Me, I entered at 0.004. I've done, one of my investors entered at QL round and got 6x and so on. So I was trying to explain something here. 20% TGE means they will release this token, this amount of tokens for me. Now, remember, I got these tokens at 0.004, very low price. If they are releasing here, let's say the current price of Chappies is what? 0.003. So if you calculate this, so just to show you the profit that is possible there and how you can recover, because the reason for TGE release is for principal recovery. It's for opportunity for investors to recover 50 to 100% of the amounts they invested in that project. So let's say I had 237,000, sorry, 237,500, 237,500 multiplied by 0.003, which is the current price of, that means I have 712. If I'm selling at this price, I actually sold at 0.005, which means 712 is returned. What was my principal investment? $500, and that means I've already seen a little $200 on top of it as profit at TGA. And now there's something called 3 months cliff. 3 months cliff is a waiting period. Currently at Chappies, we are experiencing a 3 months cliff. The first release happened, I think the cliff period started December. So throughout December, we will not receive anything. January, we will not receive anything. February, we will not receive anything because we are the cliff. Cliff is when they allow the market to calm, to chill. Because investors, if selling pressure is going to be up time investors, and then they have linear vesting. Linear vesting is your token is going to be vested for a period of time. So if the linear vesting is 10, I use EC's linear vesting. If the linear vesting is 10, in 10 months they'll be releasing like, what is your cliff balance? Cliff balance is what is remaining from here. Cliff balance is your total balance minus the 20% distribution, and then you get 433,000 as your cliff balance. So cliff balance will now be what you're receiving every month will be cliff balance over 10 over the vesting period. Some vesting period can be 24, some vesting period can be 36, and this 10 is months. 10 months, 26 months, 36 months. Some vesting period, I think the shortest I've seen so far is 6. That was on Dex Check. 6 linear vesting, which is 6 months. So that's a very short period of time. That means you can recover all your money in 6 months. And then they did not take so much money from investors. So this is what happened. That means if you invest $10, you could be bonded to a project for 2 years. And for Chappies, I'll be bonded to them for 2 years. I've already recovered my investment, and I have 1 million Chappies tokens still remaining. Let me view details. I recovered 1,000 from this, which shows that I've gotten $500 investment back, and still got extra $500 dollars to invest in another project. And then I still have their token, 1 million token in my balance. 1 million token in my balance shows that I have $3,000 worth of Chappies token locked that will be released to me in 22 months. They'll release it 1 million over 22. So they'll be sending it every month for 22 months till I can recover. And now, remember, we are going into the bull market. Remember what I told you about bull market? Bull market is the season where prices of cryptocurrencies go up a lot. So during the bull market, this cryptocurrency price can do 0.1. And if it does 0.1, and I'm getting 43,330 Chappies of my distribution, or 95,000, I think that's investor number 2, 95,000. So just multiply that by 0.1, you know that you can get even 95. Bull market, investing in the bull market is always very sweet. But bear market, after investment, there's a possible downtrend. That downtrend is going to take the investment. So during bear market, we will not be opening rounds for investments, because we are highly experienced and we know that bear market is not going to be profitable for our investors. So we'll not open rounds for you to take risks. We only open rounds in bull market. But not like bear market is always completely trash. There are some bear market investments that does very well. So if we find out that some of our investors in the ecosystem, some of the experienced Asian investors that we are connected with, are trying to push it into a project, we are going to join in with them and you guys will have the opportunity with your $10 to participate in where you might not be able to participate on your own. So that's for the most part on that. Then the next item is where I will be discussing about pre-sales, types of pre-sales, and all that stuff, so that you understand what you are doing, because this is investment. Okay, so so this is where we have it. I'm in the wrong group. So what are pre-sales? Pre-sales is more like early stage investment. Investing early in something. Imagine people that invested early in Amazon, Google, invested early in Bitcoin, invested early. Pre-sales is an opportunity for you to give this project money to finish building what their idea, finish building out their idea, and they give you in return for giving them their money to finish building out their idea. They give you their tokens as security, and this token, they also assure you that they are going to have a fair launch price, which can be at least 10x to 20x to 50x. And market discovery is going to happen. When market discovery happens, the price of the token could go down or up. And if it goes up, it is to your own advantage. So before you invest in a project, you invest in a project that has a potential to go up. And that is why due diligence is important. Due diligence is hard, but it is very important. We do it. So if you do your research, you find out more, because I don't want to be bore, especially people that are new to this, what pre-sales is about. And now, there are types of pre-sales. There is public sale and there is private sale. Those are the two main classes of pre-sales. There is public sales and there is private sales. Now, private sale is where industry investment will be targeting, because that's where the game is going down. Private sale is where the price is very low. Now, this is what I mean. This is private sale round. Private sale is when they do the seed round and KOL round. These are influencers, for the influencers. Then the pre-seed round. This is where they do private sales. Pre-seed round, KOL round. These are private sales. So private sale, you see, it's subdivided into pre-seed, seed, KOL, and strategic investments. Those are private sales. But then public sale is when they do it openly to the public. Anybody can enter, depending on what that that public platform is offering. I think uh, this public platform is offering this. I think this place is called Decubate. You see that if you invested in the IDO of this project, you are going to have 15% TGE. Depending on where you invest, there are different models. You see, 15% at TGE, they release 15% of any amount you invested. Then 1 month cliff. So they are not going to waste for 3 months like us that is waiting for 3 months. Their own is different. 1 month cliff, then linear vesting for 4 months. I think their own money will be released to them in 4 months. And then there is this other IDO platform that did the same thing. I think it's the same process for IDOs. So this is going to, for short IDOs, this public investment is always for short-term investors, but this private sale investment is always for long-term investors. This side you are seeing pre-seed, KOL, and seed round. And private sale investment, long-term investment, is actually the most rewarding. When you want to look at investment, look at it as if you are investing in assets. These are digital assets that you are investing in. If you buy a land today, will you sell it out in 3 months for profit? No. I think you will be looking at 3 to 5 years, 2 years to 5 years, depending on the area, depending on the kind of development that comes to that area. So why am I saying this? If you take a look at Polygon, let's take a look at Polygon. I've worked with Polygon before in 2021. If you take a look at Polygon, if you entered here in 2018, January of 2018, which is 6 years ago, uh, if you entered here, you have done 400x on your $10. So $10 in 2018, I remember very well, because that's the period I joined Web3, was 3,500 naira. $1 was $3,500 naira at that time. So if you invested 3,500 naira in 2018 and it does 400x, Sorry, because it will be converted to dollars. You have seen the nonsense that is happening to naira dollar rate in naira in Nigeria. So let's say you had $10 at that point. $10 times this would mean $4,000, and $4,000 is currently worth how much naira? It's currently worth over um it's currently worth over 4 point something million naira. So which investment in Nigeria, which asset investment in Nigeria will you do with 3 5 naira that will give you 4 point something million naira in 5 6 years? There is no land that I can even afford for 3 5. Okay, so this is power to the people. This Web3 investment is more like power to the people, giving room for the commonest man to break through out of poverty. And that's why it looks like blood money. You just come out with the little that you have, you make so much money, and people will think you are doing fraud, or you are uh, there's something hidden that you are doing. But if you sit down to learn the technical stuff that is inside this, you can have a very high rewarding uh, ecosystem for your finance. It will be very, very rewarding. So imagine people that invested here. It's great returns, and this is 6 years ago. 6 years ago. That's why we have to look long term. Even when all our investment have been released in 22 months, 10 months, 6 months, wherever, even when all those investments have been released and the tokens are in your wallet, because for the people that knows how to use wallet, we'll give you your token in your wallet. For those that do not know how to use wallet, we can hold it on your behalf. But some people are so they don't even understand what you're holding for them, what's the value of their money, all those kind of things. Those ones we can just convert and sell for you till you are willing to learn what is inside this, because holding is your personal decision. I will not tell you how long you should hold your token. You understand? It's your personal decision. But then it's going to still be guided by us, by our advice. We have experienced advisors, experienced people at ChainDustry that will advise you. We are in the bear market, and see, please, uncle, please sell, so that when the market goes down to a certain low, 6 months low, 1 year low, you can buy back if you really, really like this crypto project. So that's how we are going to be working. Okay, the next item here is private sales and public sales, which is something I've already explained to all of you. And then types of investors. There are different types of investors. There is individual investors, which is what you are, and ChainDustry is more like a venture capitalist investors. ChainDustry investment is more like a venture capitalist investors. We are taking money from individual investors to form our venture capitalist investors, so that we will be able to invest in early stage projects. So there are banks, there are institutional investors, there are plenty. I think it's up to 14. The classes are plenty. This is something you can find on the internet. Just hold on 1 second. Okay, I'm back. Sorry for that little break. So if you go on to do further research, you see different types of investors, which might be important to some people and might not be important to people that just want to invest and get their money. But what is most important is item number 6. Item 6 is very important. Item number 6 is something called risk profile. Before you invest, what is risk profile? It's your risk tolerance level. Let's say, for example, I can afford to invest 500,000 naira in something, and if that investment goes bad, not I'll feel bad that that happened, but then I will not feel good. Like, for example, I will not feel good that it happened, but then I can afford to do it because I know I'm a businessman. I know the things I can do to get back my $500,000. So I have an opportunity to make back that money. I have business, I have a job, I have things that I'm doing, I have things that I can get back, do to get back my 500,000 naira. But you, let's say you don't have that kind of risk profile. Your risk profile is not of my own same level of risk profile. But because I invested 500,000, you had 500,000 savings in your account that you wanted to use and travel to Canada to her studies. You now decided to invest, and the investment goes bad. You no longer go to Canada. You are not able to recover the money. I don't even know how you got it, and then you took this risks on that money. That is a very high risk rate. You shouldn't be taking that kind of risks except you can afford to bear it. Because those kind of risks now, imagine that happens. You're not able to go to Canada again, you're not able to go to the UK with the money you invested. You might be depressed. And when depression sets in, you're not going to be happy. So you might be depressed, your mental is not going to go well. But me, I'll lose the 500k. I'll feel sad that I've lost it, but I'll not be depressed. I'll not go through what you are going through for losing the same 500k with me. So please always assess your risk profile before you invest. I know you understand the terms and conditions that even the money you invest can be lost. But even as at that, understand what your risk profile is. Is it something that 100k can go in and then nothing happens to your emotions or your psychological or mental health? If it is not, then calm down, chill out, please. Make sure that, and don't be too afraid. Sometimes take the risks, especially for the dependents. You that know that if you put in this 100,000, you still have your parent to bill. Don't be scared. The people that should even have the fear factor are the people that have a lot of people depending on them, like the family people. You know that if you lose this money, your family might not eat in the next 3 months. But you as a child, because we have a lot of young people here, if you lose this money, you can still go back to your mother's house and then get what you need to get and stuff like that. For those that have mothers, or if you have sponsors and so on. So that's just what I'm trying to tell you in terms of risk profile. Young people should always have the mind to take risks. Elderly people can take risks, but should be based on your risk profile too. So, classification of investors. There are different classes of investors: novice, intermediate, expert level, professional investors. Most of us at this point are novice investors. Okay, most of us are novice, except for the Web3 native who are at least intermediate, and some people at ChainDustry who are like expert investors already. So, if I say risks, what do you understand by risks? What do you understand by risks? Is there anybody that can tell me what you understand by risks? Somebody can just unmute. Sorry for the people I muted. You guys were making noise that time. If I allow you to speak, please don't make noise. So, Divine, I'm going to allow you to speak. What do you understand by risks? Alright, please don't make noise again. If you want to speak, you can unmute and
Okay,
speak.
what I wanna hello?
Yeah, go on.
Hello?
Go on, go on, go on.
Okay. I see. Okay, I see. What I understand by Rick is being able to like kind of let.
Sorry, can anybody still hear him? Because I've lost him.
Mike is currently muted.
What did he say, please?
You're not making any complete point. His mic is now currently muted.
Okay. I think he's having a problem with his network. Is there anybody that else? Is there anyone else that can come in? What do you understand by risks?
Okay, good afternoon, sir.
Yeah, good afternoon.
Okay, what I understand by risk is taking chances. Anything can happen. You're not like anything can just happen. Somebody taking chance to do a thing.
Okay. I think risk is just an exposure to danger, loss, or bad experience. I hope you all agree with me. What you said is right, but there are many ways you can define it. But it goes down to one thing: being exposed to risks, being exposed to something that is dangerous, being exposed to something that can give you loss. but you take it. You know that you are brave. You know that this is possible, but you still take it anyway. And for the fact that you take it, people always say great risks come with great reward if it goes well. Okay? So that is what you should understand by risks. And what you are going to be doing now is a risk. You're taking a risk, but you understand the risks. That we are taking the risks with expert. It's more like driving a most of some of us here can drive. We can drive cars. But you know, if they give you a Lamborghini or all those racing cars that are very fast, will you be able to move it the way those Formula One racers move it? Formula One racers are very good with the steering, and they're very good with those fast cars, and they can move it super fast, even up to 200 miles per hour, crazy fast, and they will not crash. But if you, who is also a driver, tries to do that, you could crash the first few seconds of you moving the car because you don't have the level of experience that these expert Formula One drivers have. That is why you have to leverage with ChainDustry. It's more like joining ChainDustry's Formula One car, and we move it with our level of experience, without with the chances of crashing being low. And you know that Formula One drivers still crash even with their level of experience. So we want you to consent the risks that you understand that even as we are expert at ChainDustry with this investment, you can still crash. Okay? So that's it. As long as you understand that, we are going to present you guys with the investment details. We are going to present you guys with please, if you have finished saying what you wanted to say, you can mute so that I don't have to mute you. The background noise is distracting me. Okay. So there are different types of risks. There is market risks. There is investment risks. There are different types of risks. It's plenty. I think if you go on the internet, you see a lot of risks. There's business risks. There's legal risks. There's strategic risks. There's liquidity risks. For this investment, you are exposed to all kinds of risks. There's operational risks. There's model risks. Model risks is, for example, that TGE that stuff I was explaining to you guys about 20% TGE, 12 clip, 22 vests, which means I'm exposed to model risks. I'm tied to this project for 2 years. So if anything happens in the 2 years that I'm tied to this project, I could lose my investment. There's also liquidity risks, that if you invest a large amount of money, when you want to sell, there's no liquidity for you to sell. That's liquidity risks. That is possible. That happens to investors too. You invest $500,000 in a project, and this project do not have strong market makers that can help you take out your profit. They are not building exit liquidity for you. So because they don't have exit liquidity, you are going to lose. You have liquidity risks. I think that we have some place that we say the project must have very good market makers partnership, because I understand, yes, criteria number 12, the project must have experienced market making partners and or team. You understand? So if you have Binance, Godspeed, CLS Global, or some of those prominent companies as your market making partner, we know that our investors are going to have exit liquidity, and we want to work with that kind of project. Some of them we will not even have. So those are dangerous investments. You wouldn't want to go into that. So yeah, due diligence is hard, takes time, takes energy, but then we invest in the project that are worth it, no matter the due diligence. So investment lockup period is SAPT, TGE, Cleave and Vest. I think this is something I've already explained. Is there anybody that does not really understand what TGE, Cleave and Vest means? Is there anybody that does not really understand what TGE, Cleave and Vest mean? I could run over it again. So if you don't understand, just unmute and say you don't understand what TGE, Cleave and Vest mean, and how it varies per project. So for round 1, it could vary differently. For round 2, it could vary differently, and so on. So can you explain to me what you understand? Is there anybody that can? If you don't understand, just
Hello.
yeah, hello.
Please, can you run it again? I don't understand what they mean.
Okay, give me 1 second.
Thank you, sir.
Oh my god. All right. So now we invest into a pre-sale because that's what we'll be investing into. We invest into pre-sale, sometimes public sale in any project. There is a period that you are supposed to hold this token. Let's say if you invest 500, let me use this spreadsheet which is going to be very, very clear. If you invest $500, you can see these are the investment that you guys have made for this round. Depending on your numbers, I'm going to share this when we have completed, when the rounds are closed, when we have completed receiving funds from our investors. So these are the commitments that people have made. Most people are making $10, $20. This is your first trial, so I really understand why you're making $10 commitments and you understand the risks. So after this first round, I'm pretty sure most of you are going to increase your stakes. I'm pretty sure because you're going to see clearly. So this is how much you have committed for this round. Now for round one, assuming we enter into a project that has a seed price for us at 0.004, this is 4 times 10 raised to the power of minus 4. If you don't like math, sorry, but this is more like 0.00004. 0.0004. And based on the amount, you can enter with $500, somebody else enters with $200, somebody else enters with $1,000. Like this guy that is entering this round with $1,000 in investor number 14, he is holding 21% of the shares for round one. He's a risk taker and I like him so much. So I like, even me, I'm investing $500 in this round. He's investing double of what I'm investing. Okay, so he understands the risks. So for an investor like that is investing this, we are going to calculate, this is a mathematical model and it is very, very correct. You see that if you sum up everybody's percentages, you are going to have 100%. People that are investing $10 are holding 0.22% of the total amount of distribution that is going to happen here. Assuming we want to distribute your money back, the total amount of money that people have contributed back, you see that we are going to distribute 0.2 to 2% of this total amount to you. That's what it just means. So when you join us, you're going to have this. Then based on the token allocation, you put in $475 divided by the price. It's more like you have 50,000 naira and you want to buy biscuits at 10 naira. Assuming there's still biscuit that sells for 10 naira. Or a company is offering you to buy their biscuit at 10 naira, and you know that if you buy this biscuit at 10 naira in Uyo, if you go to Abuja, this biscuit that is selling for 10 naira in Uyo can sell for 1,000 is too high, can sell for 50 naira in Abuja. That is more like what we are doing here. So this company offers us to buy into their assets at a very low price of $0.0004. Let me put the dollar sign in front. So for you to know how much of their token you can buy at this price, is going to be your principal investment after the management fee have been deducted, divided by the price. All this will be announced. Say our price is this and that, and then you see how much you are going to get. You just come to the spreadsheet, check your investor number, check how many percent shares you are holding, and then check how many of these tokens you are going to get. The price we are doing, you can just calculate it based on this. So somebody that is putting in $10 is going to get 0.22% currently. If more investors come in, they can get even 0.1% and so on. So it's going to vary. It's not like holding a smaller percentage would mean that your money will not be returned to you. It will be returned. You understand? It's mathematical. So at this level, for those that are investing $10, if we go into the next investment that has this kind of price, it would mean that you would receive up to 23,750. Let's say for those that invested $10 into Chappies, at TGE they would have gotten 4,750. Let's say we are selling at this price of 0.003. 4,750 times 0.003. That's $14. That means you get back your $10 an extra $4.25 for yourself, which is good. And then you still have 19,000 Chappies token left in your vesting balance. 19,000. You have recovered your principal, which is the money you used to invest. You still have this one left for you to sell. If you are selling them at 0.003, which is the current price of chappies now, it is $57 that you still have left. You invested $10, you have recovered 14, and you still have $57 left. If you joined me in this investment, that is actually a good investment. Okay, that is more like 5x on what you have done, and you have a lockup period of 2 years to receive your $57 back. And that is why it's not going to be really sweet if you're using small money. You'll see your money back, but those that are using big money will see great returns. I think that's what the investor at this 14 understands about this. Okay, for those that do not have money, you still participate. It's good to invest. It's not good you pack the money and go and keep inside your account, and it's not doing anything for you. You take risks with the money. Money that is exposed to risks is the only money that can grow. So now what this means is, when we buy into this token, let me use that biscuit as an example, because that's the best way to explain this to you guys. You have 50,000 naira and you want to buy biscuit at 10 naira. 50,000 naira and you want to buy a biscuit at 10 naira divided by 10. How many biscuits are you going to get? You're going to get 5,000 biscuits. Now, if you sell 5,000 biscuits at 10 naira, you're going to get your 50,000 naira back. But then when you go to Abuja, you heard that if you buy biscuit into your 10 naira and you go to Abuja, you'll be able to sell it for 50 naira. Now, if you sell out, let's say the company says they are not going to release all of a 5,000 naira biscuit to you. They'll release this 5,000 naira biscuit to you in 24 months, which is 2 years. But at the point of buying, they are going to release, please follow me, they are going to release 20% of this biscuit for you. Some companies will say they will release 15% of this 5,000 biscuit for you. Some companies will say they will release 30%. Some companies will release 10%. So let's say the company you are working with is releasing, because we are investing into different companies. The company you are working with is releasing 0. Sorry. 10, oh my God. Who the hell is that? So the company you are investing in is giving you 20% of their investment. So the 20% of their investment is worth 1,000 of this. Now you still have 4,000 left with them, locked up, because you are like their investor. 4,000 of that biscuit left with them, and let's say in their warehouse, they'll be releasing it to you. I'll explain how it will be released. So this 1,000 biscuit that you have out of your 5,000 biscuit that you bought at 50,000, if you go to Abuja, you'll be able to sell them at 50 naira. If you sell them at 50 naira, maybe you have recovered your 50,000 back. That's exactly how it works. TGE means they release a certain percentage of what you invested in to help you recover from 50% of what you invest to at least 100%. That's the concept of TGE distribution. Then there is a cliff. That company says after we have released 1,000 biscuits to you, you wait for 3 months. That's cliff, investment cliff. You wait for 3 months before we release the remaining to you. We release the remaining to you in 10 months. Okay, you have 4,000 biscuits left. So that is it. Cliff balance is 4,000 biscuits. Cliff balance is 4,000 biscuits. And based on this token, cliff balance is whatever you have here. That's your cliff balance. And linear vest is linear, like it will be releasing over 10. You have 4,000 biscuits to be released for you in 10 months. So every month, you have already recovered your 50,000. Every month you go back to that warehouse, that company warehouse, and collect 400 biscuits. Because if you do 4,000 over 10, that's 400 biscuits. So this is what you'll be receiving every month. Every month you collect 400 biscuits, go to Abuja and sell it for 50 naira. That's 20,000 every month. Sometimes if you go to Abuja, the biscuit could be worth 70 naira. You sell it, you recover 28,000. You can go that biscuit in Abuja is worth 500 naira. You have recovered 200,000. You can go and that biscuit is worth 10 naira safe. That 10 naira invested. Market fluctuations. So that is market risks. I don't know if this biscuit explanation makes it clear to a lot of people. Market fluctuation. So it's not determined. That's why I said when I was inviting people, I was saying you can make at least 2x to 1,000x of your investment. We have carried our eye to see Polygon doing over 1,000x. There are projects that does even much better than that. So within that period of time, so some people, you might receive your biscuits, 400 biscuits for this month. You receive your 400 biscuits for January, you receive for February, you receive for March. You don't want to sell because you know that in May, April, something big is going to happen on this project, and that is going to create demand for this biscuit. That biscuit is no longer going to be selling at 50 naira. It's going to be selling at 200 naira because of the demand that is going to come in. You have sense. You decide to hold it. If you hold 400 biscuits that you would have sold at 50 naira, which is 20,000 recovery. Let's say you 400 times 3 is 1,200. If you want to sell 1,200 at 50 naira, that's 60,000 biscuits, 60,000 naira returns for you. But then you know, based on fundamental analysis, that this can go up to 200 naira. If you want to come and now sell that 1,200 biscuit at 200 naira, which is always something we do in the bull market, it is going to be worth 240,000 naira. This is something that 50,000 naira investment brought, and you have recovered the principal. Since that principal can make you go into another type of biscuit, because biscuits have different types. Let's say you are a biscuit investor. Biscuit have different types. Today you invested in Cabin, tomorrow you invested in Yale biscuit, next tomorrow you invest in Nero's biscuit, and so on. That's how it is. Okay, I hope the explanation answers your question. Zoe.
Yes, it does. Thank you, sir.
Alright, so I hope we all understand what TGE means, what cliff means, and what vest distribution means. And this also means per project it differs. I already show you for EC. There's a project called EC that we are partnering with. Where is it? There are different projects, different models. Even OX scope. I think their OX scope is 36 months, and it wasn't attractive to me.
Hello.
Yeah, go on, please.
Yeah. Thank you.
Please, calm down,
Ask
calm
this.
down, calm down, calm
I
down,
really love this initiative. Yeah.
calm down, sir. Mr. Vince, calm. Your
Yeah, I can hear you.
your mouthpiece was having a bit of issue, so it was really interfering. You can go on.
Okay, thank you. Okay, thank you.
All right.
Okay, before I proceed, thank you so much for this initiative, for bringing this. For us, maybe the newbies to have fair chance of enjoying the opportunity in Web3. Thank you so much. Okay, my question is, in some pre-sale and maybe target sale, sometimes I do see soft cap, low cap, and sometimes the allocation map out for a particular investor. Sometimes the cap may be around 50K or 50K dollars, maybe 10K dollars, depending on the project. So what I want to ask now is, as we progress, people will still need to really invest in this to take risks as well. So my question is, when we progress, maybe we have a project we want to invest, and what ChainDustry can actually invest in that project is maybe let's take for instance maybe 5K or maybe 50K, and we have investors, like individual investors that are coming through ChainDustry, that we have maybe like up to 100%, and this liquidity that will exit this maybe 50K or 5K, as the case may be. How do we handle such situation?
You made the question so long, and your mouthpiece was also interfering, so it was kind of a little bit hard for me to pick up what you were saying. You understand? It was long, and your mouthpiece was cracking. I don't know if you can make it like 1 or 2 sentences. The question can just be very simple and straightforward. You understand? I already understand what you're explaining, so just ask as if I understand the hard.
Hello.
Yeah, go on. Hello,
Sorry.
Yeah, sorry. I think your your mic was interfering and your question was very long. Can you make it very short and precise? Very short and precise, assuming that I understand all those things that you said already.
Okay, for instance, now what I am asking is that is there maybe any investment that has a kind of cap investment you can make? Like, for instance, now let's take for ChainDustry as a project. Okay, doing a pre-sale. Like, can ChainDustry say, okay, a particular investor can only ape into this pre-sale with maybe $5,000. That's the max.
Okay.
And the minimum, because I see some project that has max and they have minimum. In that case, what happened to individual investors coming in with their liquidity that exceed the cap investment plan for that particular project for each investor? That's my question.
Okay, that means they are going to miss out. Like if I understand what you say is, if there is a soft cap for $150K and a hard cap,
Yes.
if there's a soft cap for $150K and an investor is coming in with $200K, the investor has to only put $150K. Or let's say there is a hard, because they used to have investment track. There is investment track. If $150 round is open, like this polygon we have here, I hope my screen is still sharing, because I will use this as an example to answer your question. Looking for Polygon. Yeah, please take a look at this. Polygon did this, and this is the soft cap. The soft cap is the amount raised to start the project. So 165K. If anybody comes with more than 165K, Polygon is not supposed to accept, because they have a maximum, based on tokenomics, they have a maximum amount they can sell, okay, for people to join this their project. So this is the minimum amount they need, or the money they need to start that project. So if you are coming in, let's say they have already filled 100,000 and they have 65K. I think one of my investors missed out on this EC. This Rosel investors missed out on EC. They had 50K left, but before the man could send him $20K, I think one investor came in and closed 50K that was remaining. So this guy couldn't take his money again. This is proof. He told me he can't take that guy's money again because they have already reached the hard cap. Where is it? Hello, bro, we are oversubscribed, so I can't take more money. Do you understand? So that can happen. If you come in with more money, they will not allow you to join. So that's why we have to take action fast. We have the team that are investing and like they are hunting, and we have deadlines. So we open our deadlines to when we can still invest into this project. So if the deadline is 15th of January, that means before 15th of January, this total raise is not closed. So let's say if investors come in, with, let's say these guys have raised $160,000, and then investors has given me up to $30,000, because I think your question was also directed towards that part. I will not be able to join this. What I will do is take $5,000 from the $30,000 and join this, and announce to the investor that we were late on this, so we could only invest a certain percentage of our money. I'll do the mathematical model on the spreadsheet and show you guys how much money have been invested. Then we can choose to hold it, the remaining $25,000, or return it back to investors to hold by themselves. That's why we are building a dashboard, so that the money will be held on on the company dashboard, so that you can participate in another round that is going to open with your money. Because this round we're only able to grab 5,000, and if we are going to share it for everybody. I don't know, with all these things I'm saying, if I have answered your question in a little way. Have I answered the question?
Yes, you have.
All right.
Thank you.
All right. Is there any other question?
Yeah, hello.
Yeah, go on.
Another question I have is, when we do this investment, when are we receiving the first returns in the investment?
All right. If you can mute, you have background noise.
Are you getting me?
I'm getting you. Just
Like when we start in January. So like, how long are we going to get the first return of investment?
All right, please.
How long will it take?
Yeah, I've gotten your question, but you can mute your mic so that you avoid this background noise coming from your side. All right, just mute your mic and listen. I got your question, but I was forced to mute you because you have a background noise in your side. Now, how much, I mean, how long do we expect to get the return, first return on investment? Now, I explained something called TGE, Cliff, and Vests. Okay, and these models differs per project. So for every project we enter, we are going to release the TGE information, the Cliff, and how many, it will tell you how many percent is going to return at TGE for you to know. So that's why we have this spreadsheet, which is going to be transparent. We are there to answer your questions. This spreadsheet is going to be transparent for you guys to see. You see that the first investment is going to return 237,000 of this token for investor number 2 and 108,000 for investor number 1. And that would mean if the market discovery price is around 0.003 for these chappies that we use as an example, the market discovery is around this level. And remember, we invested in a level 7x lower than this. So that means investors will be able to cash out 20% of their token at 7x. So some people might receive 20%, some project might release 20%, some project might release 10, some project might release 15. It is not fixed, it varies. Okay, it varies, and then we wait for a 3-month cliff. So before we enter into a project, let's say we choose STX, we release information to investors on 20th of April. STX is going to release 20% of the TGE, so you are going to get this amount on this date. We are going to wait for 3 months. There will be an investment announcement. We are going to wait for 3 months. After 3 months cliff, STX will be releasing 4,000 of this token to us, and based on your holding shares, you are going to receive a percentage of that 4,000 of the token that STX is releasing to us. It's just a mathematical model. When you are confused, we at the company will be there to assist you. So Mr. Kerete, I hope I have answered your question. I have unmuted you so that I can ask your question again. Did I answer your question, Mr. Kerete? Okay, I think I have answered this question. Is okay. Is there any other person that has another question?
Okay, please, sorry for coming again. Just one last question.
Okay.
Can I go ahead?
Go ahead, please.
Okay. What I want to ask is there a platform where you can train these investors? Because like these investors, what I mean there is free, because some of us are actually coming from the web 2 to web 3 now to invest, and we really need to understand how things work apart from this preamble that has been given today. So if there is maybe a way platform where you get to kind of train these investors to get to understand how things work. That's my question.
All right, yeah, very nice question. And we have everything that you need at ChainDustry. All right, we have ChainDustry Academy. Sorry, I did not really introduce the company to you guys from the start because of I was trying to meet up with time. ChainDustry has 5 departments. If you look through our community, which if you can still see my screen, I'll show you this. There is a platform, it's called ChainDustry Academy, but then let me use that chance to explain other departments of the company. So this is our community. You notice that we have ChainDustry blogs and vlog. We have ChainDustry Academy, we have ChainDustry Investments, and ChainDustry Do to Earn, which is open for the public. So ChainDustry Do to Earn is where people from our community can participate and complete tasks, proportional tasks, engagement tasks for our partners at companies that are partnered with ChainDustry have given us, because they are the ones that fund the reward pool, are giving us money to put into our community to help them with the engagement. So we have a lot of youngsters and students in school who are using this as a little bit of an empowerment for them, because that is more like $10 reward, minimum of $10 reward for all of them, but they have a lot of tasks to do, and they do that every month and they get that, so there's reward. And we're also building an app at ChainDustry where users can do these things. We are building a lot of things. If you go through our website, you see some information, chaindustry.io, so you see some information there. So when we are done building that, it will be open to the public to use. And there is also ChainDustry Investment, open to everybody. There are people there are investors that have seen me, they say they are not ready to learn all these things. They just want to give me money because I'm the one doing it. Give you this money, take this risk from me. I understand the risks that I can lose my money. Okay, I sign it. But then please do well for me. They are not interested in the learning. There are investors that are interested in the learning, But then if you're interested in the learning, you have to join us at ChainDustry Academy. The training is free. At ChainDustry Academy, we are going to train you how to invest, how to work in Web3, how to upgrade your skill sets, how to trade too. We have like 4 to 5 set of training that we do. But the training is free. Why are we making it free? Yeah, we know that you are going to make money in the ecosystem, but before we make it free for you, you have to sign an agreement with ChainDustry that you are going to pay us $150 back when you start making money within 1 year. The training is 3 months, and 3 months, 1 year after your training, you must pay us $150 back. So we are pretty sure that you're going to make that money. And for you to show seriousness, for you to show commitment that you are really interested in joining ChainDustry Academy, basic class is completely free for everybody, where most of these things will be taught, most of the basic things, even including investments, will be taught. But intermediate, where serious things go down, intermediate and advanced level, where serious things go down, before you can join that level, you have to make a commitment of $10 into ChainDustry investment for the next round. That money will not be taken by ChainDustry, but it will be used to invest, like we put it into this ChainDustry investment on your behalf. So all investors at ChainDustry are qualified to join the academy because they have made investment into a round, and your investment could do 20x, 30x, 40x, 50x. And if it does that, based on the income agreements, income sharing agreement you sign, we are going to take $150 from there and return the rest to you. You understand? Apart from a 5% to, that one is separate. It's management fee. But academy training fee is $150. So it's more like an education loan to give Africans the empowerment they need to come into this ecosystem. I hope that answers your question.
Oh, okay, yeah, it does. Thank you so much. But for if someone is ready to pay the fees, like maybe like just paying without looking to okay for the investment right before the trade industry can actually give the 150. Like how much can the person pay at a blow? Like just to pay at the whole for this industry to get
Sorry, are you using earpiece or something? Your mouthpiece is very poor. It's making it. I'm struggling to hear what you're saying. It's more like wind is blowing to what you're saying. It's something like that. Oh, I'm managing.
Can you hear me now?
Yeah, clearly.
Hello.
Yeah, I can hear you clearly. Go on.
Hello, please can you hear me?
Yes, I can hear you. I don't know if I should text you in your DM. I can hear you. I couldn't get his question, but I think he was talking about how much can you pay at a blow. Like if you want to pay at once, it's very open. If you want to pay at once, you pay. You understand? Then if you want to pay, it's still the same $150. If you want to pay later, it's still the same $150. He's having a problem with his microphone. So if anybody has any other question, we could take that chance till he's back. We started 11:30, so we have been discussing for 1 hour 30 minutes. Timora, go on with your question.
Okay, I have a question.
All right, Priscilla, go on.
Okay. For the investment round one.
Okay.
Okay, does it have when round one ends? Is there a specific time for, or will we be informed? Will the investors be informed when round two starts?
Yeah.
Or it will just start immediately round one ends?
No, not immediately. We have to take time to do proper due diligence and investigations on any project we are hunting for. So every investment will be passed to the investors. We have your emails, so we'll forward you email newsletters on the next round, paste announcements in our communities, WhatsApp and Telegram. So all that is going to be being taken care of.
Okay. My next question is, each round, what is the maximum project that investors can invest?
Maximum amount $10 million. If you have that, you are welcome.
Like, no, I said maximum project.
Okay,
Like,
for each
is it one project, or you
for
can choose to invest in different projects depending on your capital?
all right, yeah, I like that question, and that will take me back to the investment phases. Now, if you read and understood the investment phases clearly, you notice that at the phase one, we have selection of project. Phase two, top 5 projects that pass through our due diligence criteria, which is the top 15 criteria we have set here. If you have passed 80%, the top 5 will be qualified for voting. And when we put it out in the community on Telegram for investors to vote, there will be a poll that we will do. Investors will come and vote, even non-investors will vote. We'll attach that poll to a video, that due diligence video, comparing all these projects. Which of these projects will you vote for? So the project that comes out first, that is most loved by the investors and the community, is a project we'll be investing in. And then we'll break down, when we choose that project, we'll now break down the investment terms and conditions for that project. We'll show you, for this project, this is what their TGE is. Their TGE release is 15%. Their cliff is 3 months. Their vesting period is 10 months, 12 months, and so on. So you understand that, and you know that you'll be locked with this project for 12 months, 18 months, 15 months. And at TGE, you're going to release this. You're going to release this amount. And when they release that amount, we'll also tell you about their listing price. Their listing price is $0. $0. And based on the listing price, you can do this amount of X. So when we claim that token, we do it on behalf of the investors. You see that we send it for the ones that are Web3 natives already. We send it to you directly to do your take your actions. But for the ones that are novice, we take the action on behalf of them with our expert that we say we want to exit at this point on behalf of ChainDustry and our novice investors. But there are some expert investors here, low key, that are good, that will say, okay, give me my token. I feel this thing will do more. I want more greed on this, and they can take it. So it's only one project. To go direct on your question, it's only one project per round. Okay, it's only one project per round. And then when we have a dashboard, we can now make room for more projects per round. If we make more projects per round, it could be hard to manage at this point that we are still building our dashboard. Okay, so we had to launch without a dashboard. But then, because the bull market is close, we don't have to wait building the large dashboard, and then we are missing out on investment opportunities that we would have had. So when we have a dashboard, it should be open for multiple rounds so that investors can diversify. And that question also gives me the opportunity to give advice to investors. If you have 1 million and that 1 million is all you have to invest in a project, I wouldn't advise you put all the 1 million into one round. Let's say you wanted to invest 1 million naira in Web3 project, in Web3 project in 2024, okay? Because you have heard that there will be a bull market coming. For round 1, you can join us with 200k. Round 2, you can join with 100k. Round 3, 300k. Round 4, 500k. Round 1, you can even join with 500k, but please don't just put in everything. Diversification is very, very important, because investment 1 can do well, 2 can do well, 3 can do well, 4 do well, 5 will do well, 6 does not do well, 7 does well, and so on. So let's say you're a new investor joining us, and you're joining us at 6, you're investing all the amounts because you have hit 1 to 5 have been doing very well, and then you lose your investment at 6. So investment diversification is very important. So we'll be making some videos from time to time, sharing you got content to understand the importance of diversification. All right. I hope that answers the question.
Yes, thank you very much.
All right, I'll take one more question before I go. If there's any other question, I'll take it before I go, because we have stayed here for 1 hour 30 minutes. Is there any other question? In the absence of no question, I think we'll come to an end. But before we come to an end, let me check if I have any other thing that we have not discussed. I think that was item number 10. Item number 10 is very straightforward. There's a difference between investors and traders, day traders. Day traders are the ones that buy crypto assets at the opening price and sell at the closing price, or any point they want to exit. They have an entry, they have an exit for the day, and they either make profit or losses. Based on statistics, 2% of day traders are successful, 98% fail. And based on statistics, 70% of investors are always successful and 30% fail. So that's all I have to say for item number 10, and I wouldn't want to take more time. So further details will be communicated to you guys in the investors group on WhatsApp. Please try and stay active there. Ask me your questions. We'll try and post it around on other channels. We also have investors, ChainDustry investments topic here at the community. So some of the details will also be discussed there. We'll also be discussing some details here apart from the private WhatsApp group. So thank you very much for your time. 1 hour 30 minutes is a very big time for you to give into this, and I hope you understood most of the things we said during the meeting. And even if you don't understand, I'm still going to do this. Meeting is recorded. I'll see how I can streamline it, compress it, and put it on YouTube and share the link to you guys to follow up. And I'll also make an explanatory video for the investors that are interested in learning the technical terms and everything separate from this seminar, and still post on our YouTube channel so that you can follow up from that video. Is there any other question? All right, so we end it here. Thank you very much for coming around. See you next time.